Hello everyone, I'm back with another bomb video and tutorial. Today, I want to talk about a strategy that has been tested and worked well in the past and in the present market. This strategy is everywhere, but I will teach the premium version of it and tell you some tips that you won't find anywhere else. So stay with me until the end and be careful. Our strategy for today is 15 minutes. And consists of two free indicators. In fact, it is a combination of several topics. Required indicators for this video: Bollinger Band (RSI). We add it to the chart from the indicators section, and we have nothing to do with their settings. And we use them by default. The Bollinger Band indicator shows us the fluctuation and range of movement of the price. And it is like a cover around the price. And in the middle of the movement range of the indicator, there is an EMA of 20 that represents the average. RSI indicator shows the concept of trend and momentum. And it is considered a kind of confirmation. This strategy can be used in all markets and has a win rate of 80%. Also, according to the rules of this strategy, we use risk to reward too. Let's go to the chart to show you in practice how our strategy works. First, we find the divergences in the price. Divergence means opposite movement of price and RSI indicator. That is, if the price rises and hits a new ceiling, the indicator goes down and the roof lowers. This is called divergence. If the price goes up but the indicator moves down, the price will go down. But if the price goes down and the indicator goes up, the price will go up. So first we find the divergences. And we understand which direction the price will go. Then we wait for confirmation. The confirmation is that the candle closes above the 20 EMA. In this situation, we take a position. For example, in this area, as you can see, the price has gone up, but the RSI indicator has gone down. So we have a divergence and the price will move down. We wait for the bottom candle of EMA 20 to close. In this case we open a short position. We set the stop loss to the ceiling of the Bollinger Band channel and set the TP twice the stop loss. As you can see, the position is closed with a profit. In this area, the price has gone down, but the indicator has gone up. So we have a divergence, and the price will rise. When the candle closes above the 20 EMA, we take a long position and set a stop loss and a tip. And it closes with profit. In this situation, the price moved up and the indicator went down. So we have divergence in this situation, and the price will go down. We wait until the lower candle of EMA20 closes. In this case we open the short position and set DP and stop loss. This was our whole strategy. But there is a point that can be very helpful for beginners. And that, by adding EMA200 and recognizing the process, the work becomes very, very simple. Practice this strategy. Look at the chart until your eyes get used to the divergence. Once you master this method, you are done. At the end of the video, I open a number of trades so that you can better understand the strategy and use it. Until next video, another bomb strategy. Bye.